Hi, good morning, everyone. Sorry, I can't help but laugh when I'm watching that thing at the back. It was like a gladiator's about to come out, and then here I am. Thank you. Welcome to day 2 of the Future of TV Advertising Global. For those of you that were here yesterday, and I'm sure plenty of you were one of the over 900 people that we had coming through the doors. And we are delighted to have welcomed people from all over the world to obviously have what is a really important debate around the future of TV. These guys, super important to helping us put this event on and to help us put together the content with some of the conversations that not only happened yesterday, but the amazing conversations that will obviously take place today. And we've got such an incredible morning to go. You know, there were some things, I guess, that I picked up from yesterday that there seemed to be a current theme as we were going through all the different sessions. You know, words like fragmentation and disruption, but also collaboration and opportunity. And it feels as exciting now as it was certainly when I joined the business 5 years ago, and obviously probably beyond for a lot of people in this room that's been part of this amazing industry. There also were a few other words I heard this morning. Sore heads. I'm not sure how many of you took the opportunity to go to one of the many drinks that seemed to be taking place last night. I've seen quite a lot of the freewheel juice shots, the booster shots being put into good use this morning. So if you need those, get that down you this morning, because we've got a cracking day to go. Right, in here, we are kicking off with building the new TV proposition. Sorry, that's the important stuff I forgot to mention. The Wi-Fi code, I'm sure you've all got that. We are going to kick off with Kate Scott-Dawkins from GroupM. You know, one of a big friend of Ad Wanted events, and certainly this event as well, GroupM. And I've seen this presentation before. They've done it at previous events. And this is really looking at the trends and the insights that we can all expect for 2025, which I'm sure we'll all agree is not really easy to predict in what is quite a difficult landscape sometimes to assess. But it's super interesting. It's going to be a brilliant way to kick off the morning here. So please give a very warm welcome to Kate.
Hello, everyone. I have the job of condensing about a year's worth of data collection and an 80-page report into 15 minutes, so get ready. We're going to talk about our latest release of our forecast called This Year, Next Year. It looks at all of the drivers of the advertising industry impacting growth over the next 1 to 5 years. We're looking here primarily at ad revenue. All the figures will be about ad revenue. We build a picture based on the health and performance of the world's largest ad sellers, many of which are digital, many of which are also TV players in this room and elsewhere. I always like to have a good design theme, so this year is the periodic table of elements. You will see motifs of that throughout, but I think it speaks to the science of predicting in our industry increasingly going forward. So numbers, big numbers. This year, we are now predicting 9.5% global advertising revenue growth. That is excluding the impact of US political advertising. We tend to pull that out because it is giant and tends to have a skewing effect not just on the US growth numbers, but also on global growth numbers. If we were to include US political advertising revenue in this figure, that would jump to 10.7% growth in 2024. We are expecting a deceleration into next year, so next year is looking at 7.7% growth, and then sort of a theme of decelerating growth out over the next few years, although, as we'll come back to later in the slides, much closer to nominal GDP growth over those years than was sort of the historical trend before about 2015. We are going to surpass $1 trillion in advertising revenue this year for the very first time. And what's driving all of this growth, right? It's a few factors. I mean, certainly, if we take the full number, the US political Advertising is a big piece of it, $15.1 billion we estimate this year. But there were also elections all over the globe. Now, they don't tend to garner as much revenue, but we had other cyclical events as well. We had the summer of sport. We had the Olympics in Paris. We had Copa America. We had UEFA Euros. All of these are, helping to support this healthy growth alongside sort of secular changes in terms of where money is going into platforms. We're going to get into that as well. But increasingly, I think the power of sport is going to be a theme that we all hear of more throughout this year and into the coming years as well. So this, I think, won't surprise many of you. This is a view just of the overall share of ad revenue by channel, how that has shifted over the last several years. The dark blue bar at the bottom, linear TV, light blue above that, streaming. Definitely in terms of overall share, that has seen a decline over the last 25 years, not quite so intensely as print. That went from over 50%, imagine back in 2000, 50%, over 50% of advertising revenue on print. We're looking at about 4% next year in 2025. Linear TV having gone from just about a third in 2000 to expecting 11% in 2025. So let's talk, I know we're all here at a Future of TV event. I think it is important to set the stage by also talking about digital, the giant from that last slide. And just in terms of setting the stage, it is going to be 73% of total advertising revenue next year. That is pure play digital. That is not even including things like digital out of home, streaming TV, digital versions of newspapers and magazines. This is just pure play digital, which we further segment into search, retail, and then other digital, which is mostly social media. So 10% growth expected in 2025. That's after more than 12% this year in 2024, and that's off a massive base. We're talking, next year going to be more than $800 billion in advertising revenue. So within just the digital shares, this is what it's looked like. You can see search having grown in the earlier years and now actually expected to begin losing some share to retail, still growing. But retail is expected to grow 13.8% next year, faster than the digital average, faster than the total advertising average as well. But that's, again, not to say that search isn't also growing. We're expecting actually more positive figures from search growth over the next 5 years than we had predicted in our previous June report. And there's a lot feeding into that: innovation, investment in the space, competition, especially with some of the regulatory and antitrust pieces going on now. Could probably spend the whole 15 minutes on that. I won't do that. We don't have time. But some of the future innovations, and I think what's going to be really important for brands going forward to keep sight of, things like agentic AI. So the ability for people to be able to ask a digital agent to do things on their behalf, or probably to ask clusters of specialized agents to do things for them. It does create a real paradox for brands where things are going to get potentially easier in some ways and harder in others to be, thought of or maybe asked for in a branded request for, like, buy Adidas running shoes instead of just buy running shoes. That's going to require real investment in brand health, brand loyalty, and the sources of that, I think, are going to come from TV for one thing. Now, I mentioned competition. A lot of that competition is happening more and more amongst just the top players within the space, right? So I'll explain a little bit. The dark blue bubbles, it's really just a visualization kind of showing how many ways these large companies are moving into each other's areas and competing, but again, amongst these very, very large players. So the dark blue bubbles are media owners. Their size is determined not just by their media revenue, but actually their entire revenue, to give you a sense of how big the scale of these companies actually are. And then the light blue bubbles are advertising revenue for each of those channels. Now, when I give this and it's all interactive, you can actually hover over the bubbles and see what's popping up. But really, you can see, Walmart now buying Vizio, starting to play in the TV space. You have all the social players reaching into commerce, reaching more into search. You have Meta reported to be looking at cataloging the World Wide Web and moving into search. All these players into commerce, media and commerce blending, right? So more competition, but again, the largest players within this, and for our reporting in terms of advertising revenue, are still Google, Meta, and Amazon. They'll make up 41% of total global ad revenue and 3/4 of total digital ad revenue, excluding China, where they don't tend to play. So it is a massive, massive deal. And one of the things that's going to enable them to continue competing in this new world, in this world of technology and AI, is the amount they're able to invest. So this is looking at capital expenditures from 4 of the largest advertising sellers. ByteDance not up here, they're still private. But Google and Meta, you can see here, has spent more on capital expenditures, and that's really roughly infrastructure, AI, chips, more in the first 3/4 of this year than they spent in the entire of 2023. And the Q4 figures are based on guidance from those companies. So it's going to be a big year. The investments are continuing to increase in order to sort of play in this new AI-driven world. TV, 1.9% growth in 25, including streaming. So this is total TV together, both linear and streaming. Any digital distribution of TV is included here. And we are talking primarily professionally produced long form. We do have some YouTube revenue in our TV figure, but predominantly it is broadcasters, traditional media players, as well as streaming and tech-first players. This is what growth has looked like over the last few years and going forward. You can actually see here, we are expecting total TV to continue growing at a somewhat moderate rate, definitely slower than the pace of overall advertising, but still growing with pretty much all of that growth at a global level coming from streaming TV. There are still markets, absolutely, where linear TV continues to grow. Markets like India, Brazil, parts of Central and Eastern Europe, certainly. But as a whole, and partly because, again, of how large the US and China are, when you add up global numbers, the picture at a global level looks a little bit different. We are still expecting decline of linear TV at a global level. Growth of streaming in 25, 19.3% globally, and it'll come up to 27.4% share of total TV in 2025. That's higher in the UK streaming share, it's higher in the US, but again, there's a lot of the rest of the world where that share is lower, and so the average comes out to 27.4. Now, I will say I think that's probably under-invested, right? If we look at how rapidly digital has taken share, what TV's share is expected to be 16%, total TV's share of total advertising versus what we know about its effectiveness. Standing up here from GroupM, we put out the Profitability 2 report this year with Ubiquity and some other partners. And so looking at figures like that, around 47% of payback coming from TV versus that 16% share of total media feels like a very big disconnect. Now, again, one thing to point out here, could have started here, the numbers in our report are total industry, right? They provide a look at all of the world's advertising revenue, including the very long tail of small direct advertisers, small medium-sized businesses, cross-borders advertisers from China, all of those impacting this, spending much less heavily on TV than large brands, which are still investing in TV. But the streaming revenue, or the streaming model has to catch up, right? So we're still seeing linear TV as the dominant source of revenue for these players. This is not just advertising revenue, by the way, this is total revenue, but still a wide variance between who's further along in the evolution of streaming taking over. So a little bit of a deep dive into channels. Let's go back up 30,000 feet to the overall picture and what we're expecting in terms of economic impacts over the next several years. We now forecast that, as I said, ad revenue growth will hew closer to nominal GDP growth over the next 5 years. This is what that looks like on a historical basis and going forward. And what might impact that. So expecting 7.7% next year, as I mentioned. A couple pieces of upside potential. What could cause us to upgrade that number even further? One is the pace and the scale at which we expect new AI endemic advertisers to come into the marketplace. That there is a swath of startups that are all using the new AI tools to create GPT wrappers and similar products and services, both for enterprise and consumers. We expect that they are going to invest heavily in marketing and advertising when they come onto the market to grow users and revenue in a playbook similar to how digital endemics did before them. The Ubers, the Airbnbs, the DraftKings of the world. That could make it go up. Recovery of the Chinese market is another one. It's been very, very sluggish. Our China numbers are actually fairly positive, but that's more because there's been non-media activity flowing into media owners rather than because of underlying organic growth from Chinese consumption. If that picks up, our numbers are likely to as well. Downside risk, these are fairly related. Fragmentation of global trade, more trade in blocks, aligned blocks than true global trade. Geopolitical conflict, whether that's Mideast, Asia, disrupting supply chains, disrupting the flow of commerce and media, and then protectionism and tariffs as well. Bit of a unknown at this point. Our base case is that there will be more of a pro-business lean. So anything significantly outside of that would cause us likely to lower our estimates going forward. I'm not going to hang out here for too long. These are total growth numbers for the largest top 10 advertising markets. US at 7%. UK at 7%, growing better than Europe as a whole. Germany at 4.5, France at 4.9, after a very strong 24 for France based off of hosting the Summer Olympic Games. They were over 8% growth for 24. So I'm going to land on this, sort of the paradox for brands in this new world. It's been a long time talking about the rise and the influx of AI and technology. Yes, it is making things easier in some senses for basic performance on these platforms, but that's not to say that, I guess at the same time, it makes things harder, right? When everyone has access to these AI tools, it raises the floor. It also raises the ceiling, the ability for brands to really stand out and differentiate in that space and be the engine of growth going forward. Also the need to build trust and authenticity, and then make sure that you're using the best of AI and guarding against the worst influences. Nearly did it in that 15 minutes. That was a lot of data. The QR code is there. You can access the interactive site with the key stats from the report. There's also an email address there if you want to email us for the PDF version of the report as well. Thank you very much.